Hi, all. Welcome to Cryptonite. I'm Sham, and I have Dr. Tejasvi with me. He has started his new gig at a Oracle. So before we start, let him. I'll ask him to refresh our memories on what this Oracle is. Maybe it's like in the Matrix. You have someone who knows everything. Tejasvi, take this away. So what's
Yeah,
going on?
yeah. So as I told you last time, I used to work at a VC fund before as a researcher, and I kind of was itching back to getting back to programming, like programming as in generally like software engineering and assorted things in computer science, and not be an investor anymore. So that was the end of the 2 year job as a VC, or not as a VC, but an investor, a researcher in a VC fund. And yeah, I'm in this new Oracle, in this new job at an Oracle company called Chainlink. So an oracle in the crypto context is somebody who has uh, access to external data and who feeds it into crypto protocols. What I mean by that is, like, the Bitcoin blockchain itself has no idea that Bitcoin is trading at $116,000. It just doesn't know that. The notion of dollars doesn't exist in Bitcoin. In Ethereum, for example, the price of Ethereum, ETH, the token, is not present on as any sort of standardized value, because who knows the price of Ethereum, right? It's like a assorted set of market actors across the world who kind of converge on a price, and the price has to be somehow given to the Ethereum blockchain if you have to do something financial on the blockchain, similar to, like, Tesla price or weather reports, any sort of external data on which you have kind of worldwide consensus, soft consensus, I would say. There would still be like disparities between prices. For example, ETH price in Korea might be different than ETH price in Japan, but there is a kind of general consensus around what the price is, and that data has to be fed into the blockchain in some capacity. So anybody who does that is kind of called an oracle, and they basically have access to external data, which is not that hard. You just check the internet and figure out what the data sources are, and then you kind of update a specific value on a smart contract in a specific location. And it's agreed that, or at least some protocols will kind of want to look at that particular location as the canonical reference price of that asset. So that's an oracle. Chainlink is probably the first or maybe the biggest oracle right now. They supply prices to many protocols. Because of these prices, liquidations can get triggered in lending protocols. Shorts can get liquidated, or uh, loans can get called back, or whatever it is. So these kind of financial activities are downstream of an oracle updating its price, which gives the oracle a bit of power in some sense. Like, they could, for example, take an opposite side of a trade and then give faulty data on the other side and kind of profit from the trade, right? So it's been well known in crypto world that oracles are one of the vulnerabilities that are there, in a sense that a centralized oracle could manipulate markets and get financially rewarded for it. So Chainlink tries to be decentralized in its own way. So they incentivize decentralization using their own token, which is a bit circular, but it kind of works. There are other oracles which are also quite popular. There's a Pith, there is Redstone, a few others. They all do the same thing, and it's up to each protocol to decide whether they want to use Oracle A or Oracle B. So, for example, Uniswap might use Uniswap itself doesn't have any sort of need for an Oracle, but think of another lending protocol like an Aave, for example, on Ethereum. It might want to use Chainlink price of ETH USD to set the collateralization limits for the Ethereum loans that it offers. So these things are used pretty extensively in DeFi. So that's where I work, but I don't work on the Oracle team of the company. I work on privacy, which is more cryptography nature, kind of goes with my academic interests as well. So I think Chainlink makes money being an Oracle, but also funds other projects around privacy and other such cryptography research as well. So that's my job. It's just basic coding these days in cryptography and assorted areas. So, which leads to an interesting consequence, which is I am not as clued into, I would call it, the day-to-day ups and downs and emotional roller coasters of being in crypto, which I used to be a couple of years, right? So that it definitely is good for your mental health, I have to admit, but it is not. It is kind of takes you away from the excitement of being in crypto, which is its own drug in some sense.
So no more PTSD from being in the trenches.
Yes, yes. In the trenches is the right kind of way to put it. Not in the trenches anymore, voluntarily so. But it's kind of fun to be outside as well. You can look at larger movements. You can look at things that actually interest you more than being caught up in the wave, right? Like for example, the pump ICO happened, and I kind of vaguely kind of heard about it, vaguely saw what happened, but did not really dig into the token allocation and which institutional investor got money and which retail investors got screwed over. What could they have done without doing an ICO? Could they have just pumped their price in other ways? No pun intended. So all of this I kind of missed out. So yeah, that's kind of one of the advantages of being outside, which is that you don't hear about random ICOs or some hacks which have happened, and some wallets got drained or whatever it is. But you do hear about the larger movements in crypto. You track what's happening in Ethereum. You track the legal cases of important concepts. Like a lot of interesting legal cases are going on. That's kind of fun. Some regulatory stuff is interesting in the US. Some regulatory stuff in Europe is interesting as well. So those things you do track, but not as closely as I used to.
Yeah, speaking of regulations, right? So Trump has really opened the like the keys to the kingdom, so to speak. So now you can buy fat coins, in your 401k, and his own company or companies at this point, right? So who's keeping track? He has like 4 or 5 crypto companies with different one with his son-in-law.
Yeah. So there are many Trump affiliated crypto assets / companies / allocations / not transparent shenanigans going on, and that is inevitable, right? That is Trump's. It's Trump being on brand, right? It's nothing really surprising. He's known for doing self-dealing and a bunch of other questionable things. This is entirely on brand. The thing is, what 401k does is obviously, as you're well aware, it just opens up a lot of capital to come into the asset space, as if there was not enough capital already, right? So now you have more dumb money coming in, so to speak, and that dumb money can be exploited, can be siphoned, can be taken by unscrupulous actors, and that will happen. Hopefully, people will be smart enough to not allocate too much of their 401k into random crypto assets. I would still recommend a few, but not, Fartcoin or Cumrocket or any of these. I would call them the left tail, so to speak. But yeah, there is definitely more money flowing, which is going to start flowing in. Not right now. I think the executive order will take a few months to go through the legal process. Somebody might challenge it as well, because it definitely puts retirement assets, middle class assets, mom and pop money into risk, and that's always been a bit of a challenge in the US. So, but it's interesting because it now shows you how political affiliation can drive these regulations very clearly. It's not the customer's best interest or whatever it is, right? The crypto lobbied hard for Trump to come into power, and they have his ear, and they are willing to do all these things to make more capital flow into the market. In Democrats' case, they were against crypto, and they kind of tried to file all sorts of legal cases, injunctions, what are they called, Wells notices against Coinbase and things like that. It is very theatrical, so to speak. But the one thing I notice is in India, it's not the case. In India, it's unilaterally bad, right? No matter what party is in power, no matter who's in charge, crypto is just bad.
Right. So, in order to discuss that, let's take a step back and see what they're trying to do with stable coins. So, with America going ahead and saying, okay, stable coins are legit, right? So here's the framework, stuff it with USD collateral, and this is the set of approved collaterals, which is mostly US treasuries. You can go ahead and launch whatever stablecoin you want. So it's basically giving stablecoin issuers an umbrella of protection from let's say a stablecoin issued in Dubai, for example. Now, given a choice between an USD-backed stablecoin versus an USD stablecoin coming out of Dubai, which one would people prefer? So people would naturally prefer, a treasury-backed stablecoin.
Also,
so
domiciled in the US, like Circle is a good example, right? Circle is popping.
Right. So, what would happen in such a situation is, a new market, like a crypto market, is now beholden to the US debt market, or vice versa. If the market, if the crypto market really goes, grows in size, then you might have a situation where the tail ends up wagging the dog. But right now, that is not the situation.
It is
So
not. I think if I look at the numbers, I think all the stable coins together are the 12th or 13th largest US Treasury holders together. Out of which Circle is not a big one. It's based in the US, but Tether I think probably would be in the top 30 Treasury holders in the world.
right. So the problem happens when if a large stablecoin issuer faces a run, right? And what are you going to do with all those treasuries flooding the market, right? So that's going to depress yields and eventually affect the mortgages of people trying to buy homes in America. So there is a bit of, I would call fear in terms of how this would shape out in the future. But for now, what they've done is basically made all crypto dollar based, or the foundation is now dollars. So that's what has aligned all of emerging markets, so to speak, against crypto at this point. Because which idiot would hold on to a depreciating ruble or whatever, right? When they can park their money in in a US
Dollars.
backed, yeah, stable coin, for example. And this can happen without the government expressly approving such a transaction.
Yeah, or even knowing
Because
about it, right? You could eventually like do this on a DeFi platform, and the government really has no way to know that you are doing this.
exactly. So that's why almost all emerging markets are against crypto. China has it banned since a few years now.
And many times rebanning it.
Many, yeah, and but they still find ways, right, through VPNs and so on and so forth to buy it. But at the same time, they are obviously afraid of it. They don't want a dollarized economy. They don't want to lose control of, interest rates and basically liquidity situation in their own country, which is understandable. And even though Rahul is a total idiot, he understands this bit that whatever you do, don't lose control over the rupee, right? So he's yet to kind of be a full maverick and say I'm going to legalize crypto if you vote for me.
And also,
So
I think the thing is, unlike the US, I don't think the retail lobby is big enough in India. The retail market demand is not that high, and neither is the institutional demand, or like none of the protocols are headquartered in the US. They're not like there's enough. Like in the US, sorry, in India, that is. In the US, there is so much more innovation and sort of companies and protocols which have kind of come out of the US, that them being banned in the US has always been a bit of a problem for them. In India, I don't know whether there has been that much demand. I don't know. You're on the ground there. What do you feel?
look, it's a chicken and egg problem, right? So the biggest thing is there is a soft ban, which is whoever has bought Bitcoin or whatever, even in the Indian regulated exchange, are facing IT notices. Okay, so it's kind of like an automatic notice. And some guys have even been like they're getting served these anti-money laundering notices, and it's a royal pain. Like you have to go to your local police station and file an affidavit and all that shit to to get back in the green. And obviously that's not going to happen without paying a hefty bribe. So you're going to get unbanked just because you touch crypto.
Yeah,
So
that's not worth anybody's time or effort, right?
exactly. And if you're just like, most people don't need a chartered accountant to file returns. But if you touch crypto, it almost guarantees that you need a CA who probably has to audit you as well. So, it's just untenable. Like if you're only inviting problems if you touch crypto, even in the legal way. And on the other side of things, there are a lot of people who think they're too smart. They're going to outsmart Nirmala Tai, and they argue that see this crypto, if you touch physical coins, right? So Bitcoin, that's when the tax deduction at source happens. But you can do these perps, right? Perpetual futures on these. They are derivatives, so it doesn't apply. So I mean, come on. Are you really going to argue with someone who sets the rule of the game, what the rules are supposed to be? So all those guys got host. So it doesn't matter whether you're trading perps or options on perps or whatever you want to call it. You're going to get thrown under the bus here. So it's a chicken and egg problem. So with this climate, who's going to innovate, right? Who's going to say, okay, this is an Indian stable coin or anything of that sort? Because when you think about it, gold is the biggest asset people buy. Okay, and there is a gold-backed coin, right? So it's on an Ethereum black blockchain or something like that.
Yeah.
And like gold in India has two layers of taxes. So one is the final GST that you pay, and even for a gold bar, they will charge you making charges, right? So it's like 5% of that, and then on the net thing you'll pay a GST. And even when you try and go and liquidate it, it's the reverse, right? So you pay GST when you
Sell as well.
liquidate it as well. So it's a royal pain to deal with physical gold. So the first use case for crypto here is to buy this on the blockchain, right? And it'll sell on its own. You don't need to do much
Yes,
marketing.
and there's a natural appetite for gold anyways.
Yeah, but unfortunately, that is something that they are afraid of.
It makes sense. I mean, any sort of capital flight or capital kind of leaving the country in a way in which it threatens the rupee would always be complicated. Right? They don't want you to sell rupees for dollars. That's not allowed, essentially, right?
Yeah,
Again,
absolutely.
financial depression. I mean, we've heard of this story before. It's not like new. It's not surprising. Yeah, but that's what it's going to be. I think eventually it'll have to be through some sort of a floodgate situation where things will just go so out of control that they have to do weird things. But India is so large and the economy is so big that these things might never happen. They will be able to softly manage the capital controls in a way in which kind of everybody is somewhat happy. So I don't see much scope for innovation in crypto in India from that perspective.
Right. So it's kind of like a write-off at this point. And to make things work worse, right? So Trump is not helping the cause at this point. So
Yeah, Trump is not friend number one. Let's put it that way.
yeah. So anything that is that any project that he is vaguely associated with, is kind of like in the shit list right now. So
also, I think Trump has now become kind of persona non grata in India, right? I mean, he used to be a bit, let's call it, favored by certain political affiliations in India, but not anymore. I would imagine.
Right. So I guess the problem is that I don't know. If you actually read what led to Trump's hammering of 50% tariffs on India, right? It's basically if Modi had just said yes, Trump called us, but we backed off on our own. That would have been enough for him. But he kept insisting that Trump had nothing to do with the ceasefire situation with Pakistan, and Trump was like, "Oh, really? Then here's another 25% tariff. Who are you to say no?"
Yes.
Yeah,
It's like the theatrics had to be managed properly.
yeah.
I
It's
guess.
like dealing with a child.
Yes.
And Modi, since he doesn't have a child, he doesn't know how to deal with it.
That is a profound observation. I would say. So anyway, kind of is it shows you that so even in the US, right, it's not been clear or easy for people. Like the Democrats were in power, they really went all in suing and harassing people, right? And the most famous of which was the Tornado Cash case, which is making its way through the court in the US now. And just for people who don't know, Tornado Cash had 3 developers, and they launched the contract on a blockchain. So essentially, they were what do you call it? One second, hang on. Yeah. So Tornado Cash was an immutable smart contract deployed by 3 developers who also maintained a front end for the Tornado Cash smart contract. And the 3 developers, one of them was an ex-Amazon engineer who is now facing charges in the US. One guy was a Dutch guy who's in jail in Amsterdam right now. And the third guy was a Russian guy who's on the run. So given that these are happening, it's kind of interesting that even in the US, it's not easy at all. You can face jail term for writing code. You can face jail term for launching a protocol. It's quite remarkable that software engineers could be targeted for being an unlicensed money transmitter without them taking any custody of the money itself. So I found that kind of interesting and kind of a bit disturbing that this was happening. Hopefully, Roman Storm will continue to fight it, and the US will continue to uphold privacy principles. But the one in the Dutch prison, he's going to spend 5 years in prison. There's no way out of that. So it shows you that in US at least you have a chance of getting away with this in some sense, in the sense that the government fundamentally believes in privacy and anonymity and all of these things. If you look back in the US history, right, the US government itself, or the US Constitution, was kind of initiated by the Federalist Papers, and those were written anonymously by Benjamin Franklin and those people. They wrote them under pseudonyms because they didn't want to be associated with them personally. And that's been the tradition in the US for a long time, and hopefully that tradition continues, though it's difficult to say whether it will continue forever. In Europe, definitely not the case. In India, most definitely not the case. So I would say, despite all the US weirdness and craziness going on, it still is probably the only place where you have enough capital and enough freedom to do magical things.
Yeah, but see, in the UK, right? So Tom Hayes, I don't know if you followed the LIBOR scandal.
Yes,
So
mildly.
yeah, so there's a accusation that some traders rigged the LIBOR closing rate to favor the trades that they had done, and the proof was really circumstantial and flimsy. But that was enough for. I mean, this was the heydays of anti-bank crusades and all that. So they imprisoned a Barclays trader called Tom Hayes, and
He was the only
in
one
the
who
UK.
got. He was the only one who got jail time, right?
Yeah, that is because he refused to cut a deal. Okay. So he's like, no, I'm innocent. What we were doing was not rigging. This is how the banter worked. This is how it was done. And it took him almost a better part of a decade, right? I mean, more than a decade to actually get an acquittal. So he had to spend all that money and all that time, no job, just fighting this case. So, imagine in India, like a civil case will go on for 20 years. So even if you could be, innocent, it doesn't make sense to kind of fight it out. So a lot of people just stay away rather than, simply, or you're so powerful that, even if they catch you, they can't do anything with you. So
Yeah,
so
you have your own coin and your own company and your own presidency, and you're immune to all of this stuff.
yeah,
Or your roadkill caught on the side, and you just get thrown away, right? No, it's really
yeah,
sad. I see the point. I guess the power of the state is such that once it sets its sights on you, even though you might be fully in the right, it just is such a pain, such a hassle, such a mental load, and such a financial burden that it's just not worth it. So that's why I kind of feel happy when sometimes people with resources fight back. So when Coinbase
right,
fought back, when folks like Coinbase who have enough resources can fight back and set precedent, so that these things are never kind of eventually become standardized. I kind of feel good about that. That's should happen more often. Doesn't happen often enough in some sense. Like for example, I feel that in Coinbase's case, Coinbase really fought back, but many of the other exchanges had settled with the SEC, right? And that it gave them enough, I would call them moral right to go after more, and that's terrible.
right. So, well, that's the legal side of things. But on the more fun side of things, Ethereum finally showed some signs of life.
Yes, sir.
Right.
Ethereum is back with a bang. Uh, it's really like it's been amazing to watch this happen over the last maybe month and a half or so. I mean, there's been a normal general uplifting tide, which is kind of coming up with which is lifting all the boats, so to speak. So Bitcoin hit an all-time high, I think, like a month ago, with $123,000 or whatever, but only in dollars, by the way, not in francs, not in euros. So that's also showing you that the US dollar was pretty weak going into the last 3 months. But Ethereum performance just tracked against Bitcoin is a nicer metric to track. So ETH BTC has been kind of down only for the last 5 years. 5 years, by the way, which has been a long time for ETH bulls to be patient. Their conviction is quite remarkable in some sense, right? So you have to give them kudos that they kind of held on to the belief that it was still the better platform or whatever it is. And now it's showing signs of reversal. I think ETBTC hit a yearly high, and is at the level of December 2024 now. It's still got on the like 4 or 5 year way to kind of catch up in terms of the performance against Bitcoin itself. But if Bitcoin continues to kind of chop around the $120,000 mark, and Ethereum does well because there is a lot of tailwinds, right? There is tokenized stocks coming, there is meme coins coming, there is stable coins, more stable coins domiciled in the US coming. So Ethereum has a lot of, I would call it legit use cases that are becoming more legal as well. And if that is the case, then there is a possibility that Ethereum will break out a little bit more. But the challenge would be against the likes of Solana and other coins, because they're not going to sit tight. They want the exact same market that Ethereum wants. And unlike Ethereum, which is much more in the spirit of Bitcoin, where Ethereum cannot really focus on anything else because there is no people who can drive the focus. Ethereum is somewhat decentralized to its credit, right? So like the crypto anarchist in me likes Ethereum because it is still decentralized to a large extent. But that makes it vulnerable to lack of focus, lack of ability to shift trajectories or whatever it is. It makes it less nimble, let's put it that way. And Solana can definitely take advantage of that, and Solana can target these markets. They have a business development team, they have a research team, they have a venture capitalist funding them. So Solana has, of course, David Sachs, who is like the crypto czar or whatever. So it has a lot of other advantages going for it. So I am happy and curious to see how Ethereum will kind of go from here. But yeah, it's been a good run so far. ETBTC is doing phenomenally well. Yeah, we hope that good things happen, because ETH is, I would say, the dominantly decentralized kind of crypto asset. I would not call Bitcoin crypto, because Bitcoin is kind of a thing of its own. So Bitcoin decentralized and kind of money, and Ethereum being decentralized kind of a platform. It's going to be hard because there are a lot of challengers, but I hope good things happen.
Cool. So yeah, I mean, in terms of Ethereum killer, I think other than Solana, I don't think any other thing has actually caught up to that level, right? So there was like Arbitratum and
No.
Base.
So, yeah, they're slightly different, right? That's the problem. So Arbitrum, Optimism, Base, they are all a part of the larger Ethereum ecosystem, and that is the kind of difficult thing to think about them, because are they separately accruing value themselves, or are they accruing value back to Ethereum? Was never clear. So for those who don't know, Solana is its own kind of island in some sense. It does its own thing. Ethereum is a larger island with kind of micro ecosystems inside, and Base is one such ecosystem, which is ostensibly tethered to Ethereum. Tethered is kind of a wrong word here, because Tether has a different context in crypto, but let's call it, it's kind of tied to Ethereum Base. Same with Arbitrum and Optimism and all these other platforms. Now, they theoretically should give value back to Ethereum, but Ethereum has been developed in such a way that those guys can stand on their own without giving value back to Ethereum, which, in a sense, is good, because they inherit Ethereum security without having to pay for it much. But that makes Ethereum, the asset itself, a bit tricky. So when Ethereum BTC was going down for the last 5 years, a lot of researchers like me and others kind of attributed this as the main reason why Ethereum is going down, which is the Ethereum ecosystem is not contributing back to Ethereum. That was the consensus opinion in some sense. I even wrote a post about it on my previous VC blog as well. We can probably link to that as well. But the last 2 months have been kind of a reversal of that trend in some sense. Is it a long enough reversal that we can think more about this, or is it just a blip in the road and it will continue to go down again? We don't know, because none of the fundamentals have changed in that sense, because Ethereum still cannot scale to the extent that the other ecosystems can scale. And if you have more volume coming in from all these institutional smart contracts, then Ethereum will suffer, and Base and Arbitrum will again start getting more volume, and they will not contribute back to Ethereum. And of course, if you are kind of sick of all of this complication, you just go to Solana, which is just a base layer which scales madly, and everything is kind of hunky-dory there. But of course, it's not as decentralized as it should be. there is a business development team, there's a legal team, there is a developer team, there is VCs involved. So Solana is more like your, let's call it VC coin, for the lack of a better word. So that's a bit tricky there. So I don't know how it will pan out rather. So I'm kind of watching it like everybody else is watching it.
Right. But now that, the whole crypto thing is under the US government umbrella, right? So what good is decentralization? Like, what is that actually giving you? You might as well just say centralized.
Yes, exactly. You could say unregulated, centralized, whatever is good thing. Buyer beware is a good mantra to have. If that is the case, then Solana and others who are coming up in Solana's kind of shadow, no, not shadow, let's say, they're breaking out of Solana's shadow, they have a better chance. For example, there's another new L1 coming out called Monad, which is got like 5 times the performance of Solana. It has some other, goodness about it. There is a bunch of others who are also coming out from development. So that's always like a possibility. And that kind of makes you wonder whether the base layer itself is kind of valuable, right? I don't know how you would think about it in terms of the cloud providers. Like, why is it that the cloud providers accrue so much value compared to the other people in the ecosystem? Like, why is AWS, Azure, and Google doing so well in terms of revenue and earning, but not the platforms themselves? It's because they actually are able to capture the value built on top, in the sense that people pay for AWS a lot more than what people are paying Ethereum, so to speak. So if there is a platform built on top of AWS, let's call it Netflix. If Netflix is built on AWS, Netflix captures a lot of value, but they also have to pay AWS a lot of money to host Netflix on top of it. If Base is built on top of Ethereum, Base captures a lot of value, but doesn't pay Ethereum that much money. So if you draw this parallel, you'll see that the cloud platforms of Web2 have a way to accrue value, which the same Web3 platforms do not. And right now they're speculatively kind of going up. But if you ever have the temptation to look at fundamentals, which is highly discouraged in crypto, looking at crypto fundamentals is like a bad idea in general, right? Which is
so. See, your theory it's close, but the analogy is close, but it's not quite the same. So Netflix did not go out and say, I'm going to build a faster AWS that sits on AWS. Okay, whereas all these guys did that. And second thing is, for example, take S3, right? The storage platform of Amazon. So I can, if I had access to, DRAM at zero cost, right? Then I can go and say, I'm going to build a super fast S3, right? The same API and everything. And I'll just host it on DRAM, in memory. So whatever you want to persist, I will just batch everything and I will save it on S3, once a day, whatever, right? So that's what all these guys are doing. So so in that case, value will accrue to me because anybody will take a super fast storage device over S3 with all its this thing. And I don't really care whether you save it once a day or whatever, as long as you give me the same persistence, right?
This is a crux of the argument. Like, Ethereum it's somewhat altruistic in the sense that Ethereum said, we will be altruistic because we care about this idea existing more than the ETH value itself. So ETH, the token accruing value, is almost like a side effect of doing good in the world. So Ethereum's value was to do good in the world. And that's why it always was a difficult token proposition. Because Bitcoin, because it's trying to be money and it will replace other monies, it will kind of go up in value in that sense, because the demand for money is always going to be there. And there's no money on top of Bitcoin, right? If you believe that world. But Ethereum, on the other hand, as you said, is like a free storage, and other people can build on top of it and use the free storage and accrue value on top without giving back because it's free, essentially. So Ethereum token holders kind of revolted against this and said that, we can't make it free. We have to accrue value to the Ethereum token by doing other things. So they're trying to do this through the ETH Foundation, lobbying, changing the code so that the charges for all these layer 2s is much higher. But that's a long process because Ethereum is, for better or worse, decentralized. And that is definitely going to make it harder for them.
Right. Yeah, makes sense. And I know, and there's a lesson in there for people who want to set up platforms, right? They have to figure out a way, not give up too much value, and at the same time, be open enough so that other people build on top of you.
Yeah, that's a very
So,
tricky balance. I don't think a lot of people have done it in the right way. It's not easy to do this. So I'm with you on this. It's definitely a lesson to kind of learn something from.
right. So I guess that with that note, we'll wrap up this month's Cryptonite. So thanks everyone for tuning in, and thanks Tejasvi. We'll meet again next month or the month after that, and
All right. Yeah. Thanks everybody for listening. Have a good day.